Good morning, everybody. There are a few more people coming in. We'll leave the door open at the back, but let's get started because lots to get through today. Welcome to the plenary that kicks off day 2 of IF25. My name's Sam Mendelson. I'm Financial Inclusion Specialist here at e-MFP, part of the team that also designs and runs the award process each year, and that includes overseeing the evaluation and the knowledge generation. In the latter capacity of this, I'm the author of a publication that you'll see at the back, and I'm going to put up on the screen. So we're taking this opportunity to launch it today, and another one on the same subject. But first, about the award itself. You'll hear much more tonight at the ceremony. For some of you, this might be the first year there. But I want to say before anything else, this year we had a very special partner without which we'd be unable to have done the award the way we wanted, and that was MIN, the Microinsurance Network. These guys, particularly Matt, Azier, and Pedro, were invaluable in helping us develop the explanatory materials, conceptualize what we wanted to cover in scope and focus, build the grids, the forms, and they exercised great patience with us lay people. So I want to say thank you to those three in particular for everything they did to make this award a success. A little bit about the award itself. Very quickly through this because I suspect everyone's familiar. It's 20 years old now. This was launched for the first time in 2005. Since 2014, it's been annual. There is 100,000 euros for the winner and 10,000 each for the runner-up from the ministry, from MFA, generously provides, and hosted by the EIB. The point of the award is to attract applications from organizations that are active in financial services on a particular topic each year around the world that are innovating in that particular area. It's unashamedly rigorous. It's a multi-stage process. We take great pride in how rigorous we make this, and it takes almost a year, and it's jointly organized by those organizations you can see there. I said that MIN were an invaluable partner. We really need them this year because we had an unprecedented field of applications. 103, the previous highest was about 80 several years ago from 43 countries. In round 1, they get cut down to this year 44 from 24 countries, and then there's another committee and a longer form, more detail, more financial statements to evaluate. And we then sent 21 pre-selected applicants from 15 countries to a selection phase, a selection committee of experts. Over 2 days, they met in September to choose 12 semi-finalists, and from them, 3 finalists. And those 3 finalists you're going to hear about tonight at the ceremony when the winner is announced. These are the 12 that were the long list of semi-finalists, and among them, the 3 finalists at the top. Sorry about the resolution of that, but I think you can see. You can also see profiles of all of these organizations in the publication. So what's inside it? We start with, and a lot of people went into writing this. We start with a tour of what is inclusive finance, how it fits within the inclusive finance ecosystem, and why inclusive insurance at scale is so difficult. There are boxes on behaviorism and trust and visibility, alignment challenges, systemic integration. Then the meat of the paper has 4 main sections within which each of these themes, the 12 semi-finalists have been organized, and they are overcoming barriers by behavioral insights and demand-side innovations, embedding or bundling inclusive insurance, innovation through technology, digital, index, and beyond, and finally, ecosystem approaches and cross-sector collaboration. There is a penultimate section where we take the organization's own words from the application forms on the lessons they've learned in their process of implementing inclusive insurance initiatives, programs, and then finally, 10 insights that we, the team, this year have extracted, inferred on current best practice in inclusive insurance. Finally, there's another paper. It'll be delivered to the Abbey later today. It is online now, but there will be some hard copies. And this is the Members Spotlight. In previous years, for the last several years, we've done a Members Spotlight on the topic of the award with just a few short questions. What are you doing in the particular area? This year, we tried to do something a little bit more ambitious and what we think is of greater value to our members. And that was a short mixed methodology survey, a bit like the Compass, to ask not only what are they doing in inclusive insurance, but what do they see as the key barriers, trends, big innovations, opportunities, what's coming ahead. There are some great insights in there. I commend it to anyone working in the sector, and I want to thank the 18 e-MFP members, organizational mostly, who took the time to contribute to this. I think it's an important way to straddle e-MFP's dual roles as think tank knowledge leader on the one hand and member-based organization serving their needs on the other. You can download them via QR codes there, but otherwise there are hard copies around, or you can visit the e-MFP resource website and you'll find them both. With that, I'd like to welcome everyone again, welcome the speakers, and now I'm going to hand over to Matt from MIN to give his presentation. Thank you.
Thanks, Sam. And I just want to say that publication on the finalists is really, really well put together, and I would really advise you to look at it. There's a bit of competition about the number of publications being launched this week, so we should have a little tracker to see which one wins. So my name is Matthew. I'm the director of the Microinsurance Network, and the objective that I have today with you is to give you an overview of the landscape of the sector. And one of the main tasks that we do at the Microinsurance Network is really to try and better understand the network and how we better understand the sector. And how we do that is we publish what we call the landscape of microinsurance. And this is a global study that kind of provides an overview of the sector using granular data that we collect from the insurance providers. And it tracks the coverage, it tracks the premium, it tracks the products, the claims. We look at trends, we look at market developments to really understand where the market is at and what's going on within this sector. And so today what I'm going to do, I'm going to give you a quick overview of the sample size, the market, and then we'll go into some myths that exist within this sector, but I will explain those in a little bit. So on the sample size, our latest report was published this year in 2025, and we collected data from 294 insurance providers in 37 countries. Now that covers just under 1,000 microinsurance products. And the graph that you can see on the side there just shows an evolution of the data that we've collected over the years. And the idea that I wanted to show you this was just to give you an idea of the sample size that we're working with. And the data that we do collect is collected on a voluntary basis. So we go to the market, we have people in the countries who contact the insurance providers and then collect the data from there. We are working with regulators and associations to help us through this process, and that's where we want to go in the future, but at the moment that's how we work. So let's dive into the data. So this, oh, it's blue on my, this graph essentially shows the percentage of people covered globally compared to the estimated target market. So what we found is that only 11.5% of the target market is covered with one type of microinsurance product. And that represents around 344 million people. Out of a possible, we've estimated 3 billion potential market. So that leaves around just over 2.6 billion people who are totally uninsured. And yesterday, someone was mentioning about the number of people who don't have access to bank accounts, and they mentioned 1 million people. So it's double that don't have access to insurance services. The good news is that the amount of people that are being covered is on the increase, but the market is, as you can see, is far from saturated, and it represents a huge opportunity for the insurance industry. This next graph is one that I really quite like because it illustrates something that is really clear. So what you see here is the number of new products launched each year throughout the period. And obviously, since the early 2000s, you can see that the number of new products that are launched each year is on the increase. And it shows a clear trend. What we're seeing is more and more products within this sector. So that's really positive. It shows that insurers are becoming more aware of the business opportunities that this market shows. And I think, because we're in a microfinance conference, it probably kind of reflects quite similar to banks, the evolution of banks downscaling to the low-income markets. It's going to be interesting to follow this graph over the next few years, especially with the changing kind of donor environment and seeing how this is going to affect. But in my view, I don't think it's going to be too affected, because a lot of these products that are being launched are on a commercial basis and are not donor dependent. I thought I had another graph. No, I didn't. No, okay, so now we know the market size and we know the potential market. So why aren't there more players that are coming into this market? And we believe it's kind of down to some preconceived myths that people have around insurance. And what I'm going to try and do is try to give you a little taster of these myths, and I'm going to try and bust these myths with data. And the first myth is that microinsurance offers limited business opportunities and is very difficult to scale. So that's the first myth. And the second myth is that reaching these target populations is challenging. And I have in my notes saying, because I thought everyone was going to be on my left, I said all you have to do is look to your left to see examples of where they've busted these myths easily. But they'll come up and tell you the stories later. So let's look at the first myth in terms of business opportunities and scale. So this graph shows you the number of people that are covered by product line. So what we see here is we see a dominance in life and accident. So 274 million people out of the 333 were covered by life and non-life. That's 80%. So a huge domination in terms of life and accidents. Then in agriculture comes second with 42 million people, but there's one caveat there whereby there's a program in India which covers close to 38 million people. So if we take that away, we're much lower. And that program is PMFBY. It's a national state-run program for insuring farmers. Health insurance is on the up. It still remains significantly small, but we are seeing progress with health products. And I think this is where the opportunities really lie, because there is huge demand for health insurance, and it's one of the most important ones that we need to look at. So what I'm trying to show with this slide is really the opportunities that exist within the sector. This next graph is one of my favorites because it really kind of highlights the importance of having a long-term strategy when entering this market. What you see is each column represents the average number of people that are covered after a product is launched. So for example, after 2 years, you can see on average a product is covering around 3,400 people. So obviously, the longer a product is in the market, the more people it will cover. But what we can tell from this is that it typically takes about 4 to 5 years for a product to reach scale. And this needs to be really kind of taken into account and understood by everyone who's being involved. We launched the report yesterday about MFIs and distribution. And one of the surveys that we did in that, we found that 45%, so nearly half of the board members that we interviewed, said that they expect returns within a year of launching a product. So this kind of awareness needs to be shared a lot more with the directors of these types of institutions. This next slide is about the claims ratio, and I couldn't not have a slide about the claims, so we can't not talk about the claims, because the claims ratio essentially is the proxy for value. So how much value are we giving to the client? So how much of the premium that are paid is returned to the clients in claims? We call it claims ratio, but the industry calls it a loss ratio. And it kind of gives you an idea of their mental state and where they see it. And giving the impression that paying claims is bad for business, we're going to see examples there whereby that is not the case today. So the graph kind of shows what we have on the graph. We have the claims ratio. I don't know if you can see, which is the dot. So the average claims ratio across the product line is around 23%. Which is relatively low. And it really kind of tells me that there's so much more that can be done in this sector. And Lorenzo from Pioneer is, I'm going to tell one of your stories. What he does is if he has a product with a claims ratio less than 50%, he gives back or he increases the benefits. So he makes sure that there is some going back to the clients, ensuring that they feel valued from the product that they're producing. The other thing that's interesting on this graph is the turnaround time. So this is the amount of time that it takes from the event occurring to when they get paid. So you can see it varies from 30 days to 2 days. You know, there's some claims ratio that do it in 12 and 24, and even less than that. So it is possible to be very reactive in terms of paying claims. The next myth, and this is coming to one of my last slides, is reaching the population is challenging. So this is the second myth that I wanted to talk about. And this graph essentially shows the different distribution channels that are used by insurers. So on the left, you've got the global perspective, and then on the right, you've got the difference between the different regions. And what we see is that traditional models, traditional distribution channels remain dominant. You know, you've got your banks, you've got your MFIs, and you've got your agents and brokers. Latin America and Africa, their channels are a little bit more varied, while Asia is more dominant with agents and brokers. And what we're seeing also on top of that is new players coming in terms of their delivery. So we're seeing M&Os who are coming back. Richard's going to talk about those later, who are kind of coming back into this sector after coming and then going. And insurtechs as well are proving that, you know, innovation and creativity, they can unlock new ways of distributing insurance. And you just need to look out for Ibiza, who are somewhere here, and talk to them. The other thing that's important that we saw from the data is most products use at least 2 channels to distribute their products. And what we've seen is that, you know, the more distribution channels a product uses, the more diverse it is and the more potential it has to reach that target market. And now we were talking to Ali from IF25, I think he's here somewhere. And in our member meeting the other day, he mentioned that IF25 have around 35 distribution partners, I believe. So it just shows that there is opportunities out there. This is a graph just to show, I won't go into that. But anyway, I'll finish there because I think my time is up. But I do want to just let you know about another report. But this was launched a while ago in March. So on the left is the landscape of microinsurance, which you can download and it is available in print and down the bottom. But more importantly is on your right. So on your right is what we're calling the data hub. And so this is an online visualization of the data that we've collected. So you can go onto the website, you can click on a country, you can click on a region, you can see the products, you can see the claims, you can see the distribution model. And the idea behind this is to give you the opportunity to do your own analysis and enable you to glean information from that data. So that's it from me. Thank you very much for listening. And I'm going to hand you over to Rishi, who's going to take you through the discussion. Thank you.
Are you shy?
Never.
He's shy.
Everywhere or?
Wherever you want to sit, it's fine. I can sit at the end. Hello, good morning to every one of you. It's a very great pleasure to be here. Richard is a little shy, so we are going to kick off with him. No, jokes aside, my name is Rishi Raitata. I'm the Director for VARC Consulting. My job here is to make sure that we get some quality out of what I think is a star-studded panel. For the inclusive insurance space, it really doesn't get better than this. And so over the next 40 minutes, we're going to try and see a little bit about what the industry has been doing, what it's learned, and hopefully where it's going in terms of building resilience for the 2.6 billion people who lack access to insurance. Now, much like Matt, I'm also a sucker for data. I spent yesterday looking at everyone's LinkedIn profiles, so if you realized what I was doing, I was obviously snooping. We have five panelists here in person, and we've got Roshane, who's joined us online from Pakistan. Now, collectively among our panelists, they've got about 120 years of experience in inclusive finance. To make sure that we get the most out of the session, I'm going to ask one question for every single year. So if you all don't mind just clearing your schedules until the award tonight, that would be great. Thank you very much. No, but jokes aside, we're going to try and get through a few questions to look at where we've got concerns and barriers around accessibility. We've got concerns around trust. We've got concerns about affordability. And we've got concerns about awareness. Now, when you think about all of these four things, they're actually a bit difficult to remember. And one of the things I've learned going to the fantastic training sessions that Craig and Pranav run for the ILO is come up with an acronym. So the acronym today is AATA. It's not very sexy, but if you pronounce it as ATA, which means what in Hindi, Pranav?
Atta.
Yeah.
Atta is the flour with which you make roti.
Great. So now you know how to make roti, and now you know the acronym that we're going to talk about today. But let's get straight into it. You know, we've looked at the kind of products that are available in the market. And the first thing I want to look at is what enables this to happen. So the question I have to kick off is, how can regulatory frameworks, emerging technologies such as AI, data, and mobile, and digital platforms shape microinsurance innovation or inclusive insurance innovation and distribution? And I wasn't joking, Richard, you are going first.
Oh, am I? Okay, that's not good. So I mean, it's a huge question, and I'm not sure could even hope to answer even part of it. But I mean, look, when I started out doing microinsurance in 2002, which is 23 years ago now, I didn't think regulation was really that important. I thought that, you know, embedding insurance into microfinance loans, which is where we all started off, you know, was already kind of covered by the regulations that existed. So we could kind of work within the existing regulations. And as the market has developed and as distribution and products have become more complex, actually the role of the regulator has become increasingly important, so much so that I now work for one, right? I actually, you know, didn't think they were relevant. Now I actually work as a regulator in the Bahamas. So you're all welcome to come visit anytime you want. And what we're starting to see, I think, is that, I mean, for example, 2009, 2010, that's when, you know, mobile networks were first started to be used to distribute microinsurance. And that's when we first started to see the need for regulators to make changes to allow, for example, things like, we couldn't collect a signature on a piece of paper. So, you know, accepting a text message, for example, as a way of someone signing up for insurance. So the regulators do play quite a role in helping facilitate kind of new products and new distribution. And then if I can just touch on AI, I think, I mean, AI is a great buzzword, and I think, but unlike blockchain, I think we are seeing it actually making a difference in the real world, right, in insurance, in a way that perhaps blockchain didn't. And AI is playing a really, really big role in removing friction from after the product is sold. So once the product's sold, AI is being used in chatbots for people to ask questions about the product or make minor changes or even submit a claim. And that is helping the customer, and we're seeing that now in some of the claims turnaround times kind of coming down, which is great. But it's also reducing cost for the insurance companies, which is also great. Where we're not seeing it yet is in helping to sell insurance to people. And so we're still very heavily dependent in microinsurance on embedding insurance into these kind of B2B channels. And I think one of the big breakthroughs that we may or may not see in the years ahead is the role of AI in helping actually sell insurance to people. And it'll be interesting to see if that happens.
And let's just hold on to that thought, because just 2 days ago, Lara, you were moderating a very, very interesting panel on the emerging use of AI. We had 2 fantastic panelists. So perhaps we could look at what your take is on the use of AI in digital platforms, especially with the work you do.
Yeah, well, first of all, thank you very much for the invitation. And I wanted to start first saying that today is a big day for inclusive insurance. because this is the first time in the Inclusive Insurance Finance Week that we dedicate so much time to discuss about this such an important financial tool. And I think this reflects the fact that we cannot talk about financial health without talking about insurance, and inclusive insurance cannot exist and develop without taking into account the broader financial services development in a given country. So really well done for all the organizers. Thanks a lot for the invitation. And where I was heading then to your question is that because insurance doesn't exist in a vacuum, trends need to be taken into account. And technology as such is really more a means to an end rather than an end in itself. And we've seen time and time again the promise that technology is going to fix the protection gap, but it hasn't been the case so far. So going to the point around artificial intelligence, part of what we have identified is that you can very much enhance a customer's experience even before they buy the insurance program, in letting them access and understand how insurance could improve their day-to-day lives. But then afterwards, it can also enhance the quality of the services that you provide. And I have two examples of what we're doing at AXA Essential. For those of us that do not know us, we're the inclusive insurance business of AXA, and we protect over 18 million people in 21 markets around the world. And our very incipient experience on AI is first on simply engaging with customers that are just curious about insurance and getting insights into what kind of questions they are asking and what kind of language they are using, so that we can then embed that into the marketing material and into the sales efforts when we're trying to distribute the product. And the other example is for all our work on health equity for all, is we are embedding AI into some primary care interactions with customers, where it just facilitates the initial diagnosis or the pre-analysis of risk of a given customer, so that healthcare professionals can make faster and more informed decisions of what the path for treatment can be. And so these are two examples on AI. And then finally, on distribution overall, I think the big lesson is insurance needs to be where customers are, and insurance products need to be offered in a way that it makes sense with the context. And so we're currently working a lot, given the shifting occupational landscape, with a lot of gig economy platforms. We protect over 300,000 gig economy workers in Asia and in Latin America, with solutions that either protect the drivers and passengers when they are on rides, but we're also allowing gig economy workers to pay for insurance by kilometer and to change the sum insured of that income protection cover depending on the kilometers that they have ridden across a month.
We've already made a bit of mileage with the example, so thank you very much for that. But I do like the fact that you talked about having to take insurance to where the customers are. And Solène, you have a lot of experience in this, because with the work that you do, you are very deeply embedded in some communities, yet technology still plays an important role in the work that you do. So I'd love to hear a little bit from you on that.
Yeah, thank you, Rishi. So the first part of your question was on regulation, and I just wanted to mention that in the 25 or 30 countries where we operate as Vision Fund, whether it's for our own MFI in 25 countries or for World Vision entities in the other countries or for other partners, what we see is the countries where we challenge to grow are surely the countries where the regulation is very limited in terms of micro-insurance enabler. So, for example, in West Africa, with the CIMA code, we are not allowed to bundle the insurance with the loan, and bundling insurance with the loan is just not easy. Of course, it's easy because the selling process is the same. So in terms of operation, the costs are less. but it's also for the clients, because then bundling the insurance with the loan, it means they will be paying back the premium on a monthly basis through the repayment of the loan. So this is a facility of payment for the premium. So this is on the regulation. We also have the commission rate cap in West Africa, for example, where it's very difficult to operate because operational costs, especially to kickstart, are quite high for the MFI taking insurance on board. But to your question on technology, so technology, of course, help us to be more efficient in what we do on delivering insurance. For example, at the education level first, before we enroll people into an insurance scheme, we educate them, and then they have a test on a tablet, and if they don't pass the test above 80%, then we do the education module again. So just to make sure that they understood what is insurance, and also they understood how they can help, how it can help them, and how they can use. So this is on the education side. On the enrollment side as well, we have one program that started in Rwanda, and now it's extended to a few countries in Africa, where we distribute insurance to the savings group. So distributing an insurance to savings group is not the same as distributing an insurance to a community group, for example, for MFI, traditionally what we do as an MFI. Here, savings group means among 20, 25 group members, we will only know the KYC of 3%. But then we still need to have the insurance company covering all the members of the group, plus all the family members of everyone. So what we do is we ask people to put all the ID card on the table, and we take the picture. And this is how we just send the picture to the insurance company. And through the AI, soon, and it's in test, they will be able to take from the picture directly the information. For now, they recover the information at the time of a claim, if there is a claim. Yeah. So this is another example. Of course, on the claim process, with Turaco, we have our claim payment within 6 hours through the AI as well, through WhatsApp. People, they send the copy of their claim document on their hospital discharge. Turaco receive immediately through WhatsApp. Through the AI, in 6 hours, it's back on the mobile wallet of our clients. So this is another example. Again, you mentioned, or Matt mentioned about Ibiza earlier. So with Ibiza, we don't have to even open a claim. It's automatic. The claim payout is automatic without having to file any claim document. So this is how technology helps us.
And I'm glad you brought up two things. Obviously, the product you have with Ibiza, we were looking at that earlier this year and thinking, how cool is this? And we're just going to talk about that in a second. But the point about financial education is so important. Unfortunately, it reminds me of an episode this year where I tried to open an account to do some stock market trading. And they said, no, you can't have it, because clearly the behavior I exhibited in the question they asked was too volatile for their liking. So please don't ask me for financial advice. I'm not qualified to give it. But on the products, on the product side, I want to change the guard a little bit and bring in the two gentlemen at the other side of the row, and bring in Roshana into the conversation. When we think about the kind of products that we have and the innovation that goes into them, how have you seen providers balancing affordability and coverage while innovating to serve diverse income groups and adapting products to local contexts? And I'd like to start with Roshana, because I know you've been quite patiently waiting for this. So let's go with you, and then we'll move over to the gentleman.
Thank you so much, Rishi, and I'm sorry I'm not there in person. This is a very elemental question, and a lot of it has been already touched upon during the earlier conversations. So I think when we are looking at designing insurance products, for us in particular, the challenge was targeting women from low-income communities and making sure that whatever product we brought in, it was reflecting their healthcare needs. So I'm talking more about the health insurance product that we have, which currently covers about 4 million beneficiaries across our network. And there were three elements to this. The first was understanding what women wanted. And I think the first challenge that came up was the issue of including reproductive health in that. And traditionally, you don't see that happening in the insurance space, that's not covered. So we really had to discuss this and bring this to the fore in terms of convincing the insurance company. And the affordability issue, of course, came when that happened. The other was the question of the kind of medical tests for exclusions that needed to be taken place. So when we went to the traditional insurance company, they were saying, you needed to do these tests. Of course, from an affordability angle and a scale angle, it's not affordable for a low-income family to be doing these medical tests. So we came at it by designing a product which addressed both of these concerns, that those were the key parameters when it came to determining affordability for everyone, whether it was the client, whether it was the insurance company, or whether it was ourselves, because we were managing as an agent the entire claim process. The third element, the second element, the first was in these two that reflected the design. The second aspect was how do you ensure that this becomes sustainable. So the sustainability angle came when we ensured that this was a mandatory product and it was embedded into our entire microfinance lending model. So it became that did away with adverse selection and moral hazard. So you dealt with those two aspects, which again affects the risk, the pricing, and the affordability and the actuarial analysis that goes with it. The third was the piece that was already covered, which was related to the issue of education. Now, this goes back to the claim ratio, the point that Matthew was raising. The claim ratio is the indicator which tells you how useful this particular service is or this particular insurance is for the client. So in our case, the claim ratio for our health insurance is 76% overall, but there's an interesting gender perspective to this. Because we had designed this with women in mind, and because we had leveraged their needs to the insurance company and convinced them that this model would be affordable, women became the frontline users of this, this was a gender agnostic product, if you think about it. So the claim ratio for women in our profile is higher. It's 83%. So again, the claim ratio, and then add to it the turnaround time, that also impacts on the affordability aspect. So, when we look at our turnaround time, originally it was 30 days. Now we brought it down to 10 days. And the way we navigated this was through technology, of course, through making the systems faster, and through also ensuring that we bifurcated the kind of claims and enhanced our capacity as the managers of the claims by adding, for example, medical doctors in our own in our own staff. So that gave the insurance company credibility on us, and we could then process claims directly rather than having to go to the insurance company. And then I think the last piece, which I cannot stress enough, for this to be effective, education of the client becomes central, because insurance, and especially health insurance, is an intangible when it comes to the client. They may use it or they may not avail it. So we had to do a lot of work to convince the client on the value of this, and we continue to do this. It's like Chinese torture, whether it's for the clients or whether it's for the staff. So I'll stop here because these were some of the aspects on affordability. And then, the last point is, how do you collect the premium? So initially when we designed this, the premium was lump sum. At the time of the loan disbursement, we took a lump sum from the client. And this began to be seen as a pain point, and the client viewed this more like a price of taking the loan rather than as an independent service. So then we actually changed that, and now they pay about $1 every month for the insurance cover. So it doesn't pinch them like that, and it is now distinguishable as an independent service.
Fantastic. Thank you so much. Some really good figures so far on turnaround times and processing times from yourself, Roshana, and of course from Solène as well. I also want to hear from Lorenzo as well on this, because Lorenzo, a lot of the work you do in the Philippines, we look at in the industry as the standard to sort of adhere to. So keen to understand a little bit more about how you've managed to achieve the scale that you have with affordability and coverage as significant drivers.
Right, thank you. I think the first thing to do is, I think we always try to strike this balance between what is affordable and how much cover they need. So we're always torn between give them everything they need so that if they suffer a loss, they can fully recover. If you do that, the low-income sector will never be able to afford it. So you're always striking a balance between what can they afford and the ability to recover. So what we did was actually, after numerous failures, we've actually gone to the market and decided we have to talk to the target market, to the clients out there. What is it you need? What are the risks you face? How much can you afford to set aside and pay? That's very important. Now, so the issue of affordability ceases now to be, is it cheap or is it expensive? Because that is so relative, isn't it? What is cheap for me may be very expensive for you. And so what we do is, so how are you going to approach these clients? So we do this with partnerships. With some of the partnerships, like Microfinance Institute, we organize loans. They get loans for so many businesses and other things. Why not a loan for insurance? So that addresses the payment of premium in one lump sum, and so they're covered for a year. The other bit, but however, there's some without access to microfinance institutes. So you go with how often do they get paid? Are they daily wage earners, weekly wage earners, or monthly wage earners? And then you tie up the payment of the premium on that. So with certain motorcycle dealers we deal with, they choose to pay bi-weekly or monthly their motorcycle loans. So we tackle the payment of the premium for the insurance that way as well. Now, I think there's so much stuff we can share with you, and it's all very theoretical, but let me give you just a quick example of what it means, what's affordable, and coverage. Several years ago, we had a very, very bad typhoon in the southern part of the Philippines called Iligan. It's an area always spared by storms, but it was so badly hit. We had a client who died. Now, so we quickly looked. He was a radio commentator, and we found out that he had some basic cover. He took out a cover. He paid $8 for an annual cover, which included accident, burial assistance, property damage arising from flood, typhoon, and earthquake. So we paid out immediately, I think within 5-6 days. And a year after, we went back to visit the widow, to interview her, and asked her what she did with the proceeds. She actually got paid $2,300 for all the coverages I mentioned, $2,300. Now, to you and I, to some of us, that's probably airfare somewhere, isn't it, with the short holiday. To her, what did she do with it? She said, I put back the roof over my head. I buried my husband. My father, who was caught when the car we rode in overturned in the typhoon and needed his leg amputated, I paid for the medical bill. And because I lost my husband, I started a small business at home. All that for $2,300. So it's all relative, isn't it? We may think it's small to you, but it meant a world of difference. Now, the most important thing, and this I was sharing with Craig earlier today, when we visited her, we said, but what's most significant about that insurance? She said, because of that, my son and I never had to set foot in the evacuation center. We did not have to wait for government doleouts. We did not have to wait for relief goods because he had enough foresight to buy insurance, which enabled us to resume our lives, to rebuild our house, and to restart a business. So maybe that's one way of looking at balancing affordability, coverage.
Thanks very much, Lorenzo. I mean, that's one of many examples that we've heard from you over the years in terms of the good work that we've seen in the Philippines and the impact that it's also had on people who've actually gone out and bought insurance. Craig, you've got a slightly broader view given the work that you do in the space, and I'm keen to sort of understand because when I looked through the list of people who've been in this space, I think it's really between you and Roshane in terms of who gets the prize of how can I put it this way, like the industry elder, if I may, in the nicest possible way. But I'm keen to call on your experience to understand a little bit more about how you've seen affordability and coverage help to try and grow the space. And if you talk about mishaps, that'd be even better.
Okay. Good morning, everyone. It's great to be here. It's great to be talking about insurance at the European Microfinance Platform Week, or Inclusive Finance Week. I have been working on this agenda for a fair number of years, so thanks for telling everybody. I think one of the key things to be thinking about is, the objective isn't about how do we get more insurance to more low-income people. The objective is, how do we help people to manage their risks more effectively? How do we promote resilience? And insurance is one of the tools that they're going to need to manage resilience, but insurance is only relevant for risks that occur infrequently and are unlikely to occur and cover large losses. So that if you think about all the risks that low-income people are exposed to, that is a pretty narrow band. And so insurance is for that narrow band, but we want to be able to figure out how they can address all the other risks that they're exposed to as well. And so if we think about, if we combine insurance with savings, with emergency loans, with risk prevention, let's adopt and embrace a sort of a resilience agenda rather than how do we get more insurance to more low-income people. So I do think the idea of combining insurance with other financial services is really key. And all of the examples that people have been giving so far have been combining it with loans, which is great. It makes sense in microfinance space. That's what most microfinance institutions do. But that only covers people who are borrowers, right? So that's also a narrow band. So let's think about more creatively, how do we combine insurance with savings? Because that's a more permanent solution. Even borrowers aren't borrowing all the time, forever. And so people go through a loan, then stop for a while, go through another loan, maybe stop for a while. And what happens in that between space when they aren't borrowing is, do they have coverage? No. So how do we make sure that they have protection even when they're not borrowing? And one way would be leveraging the savings. In terms of the affordability and scale piece, I think Roshana alluded to this, or she said it very explicitly, that by embedding it with, in her case, the loans, is a way to make sure that you're covering lots of people all at once, which is fantastic, right? What we see the embedded model as, and Selene was arguing that this is a regulatory obstacle, as being really the starting point. It makes a lot of sense for everybody because it can cover a lot of people much more cheaply. You don't have any of the sales costs. The big drawback of the embedded model, as everybody probably can recognize, is that then people don't even know that they're insured. So you really need to make sure that if you are talking about embedding insurance with loans or with savings, that you also make sure that they know that they're covered, how to claim, and what the benefits are, and so forth. So I love the example. Who was it? Selene was talking about the
tablet.
Yeah, the test that people had to take. Yeah, so that's a really cool way of making sure that people know that they're covered and validating that. So in terms of balancing affordability and scale, starting with the embedded piece makes a lot of sense. But if you really want to give people what they want, what they think they need, you need to go beyond the embedded part. So once you have that coverage that everybody gets, then how do you cross-sell, upsell other coverages to allow people to more customize it to what their needs are? And ideally, what you want to be doing is to be thinking about this, making sure you're not just covering people who are borrowing, but that the coverage gets to everybody. But the real challenge is, insurance-only products are hard to get to scale, and if they're not getting to scale, they're not going to be sustainable. So you really need to make sure that you're getting to scale, and so that's where you're embedding it with somebody else, but then you got to make sure that people know that they have it and know how to claim.
We were talking about savings and insurance earlier, and I think that's really something that hopefully we'll see happen a little bit more, where obviously the regulatory environment permits it. And one of the challenges I'm dealing with in the work that I do when I'm clearly not making lame jokes on stage here is to try and understand what this actually means. So if you embed a financial test into a process where someone has to pass it to get access to a product, are you going to see a drop-off rate? Unfortunately, the answer is yes. And there isn't really I can see Richard smirking, I'm coming to you in a second, just wait for it. But there isn't really a good answer I have for this right now. But I'd say watch this space because clearly it's identified as a major issue. Laura, you talked about taking insurance to where the people are, and this next question is about distribution. And so I'd like to start with you on this. I think, Richard, it's okay to wait, clearly. But how have you seen distribution partnerships that have driven progress in achieving large-scale rollouts? Because you've got experience of this across several markets. And then what sort of strategies have helped to build trust and delivered education to end users?
Yeah. Given how many people here work in the insurance industry? Can you raise your hands? So I'm going to shift a little bit the question more to what does insurance bring to other sectors, and why does it make sense to embed insurance into other sectors' activities? So when we think about insurance on just as a pure payment of claims exercise, we kind of miss the overall point that Craig was talking about earlier. It's not only about coping with financial shocks, but it's been documented that having insurance enables households, small businesses, governments, large institutions to make overall better decisions, more thinking about the future. Better investment decisions, better savings decisions as well, better budget decisions for governments, for example. And this is because having more resilient communities, it just allows them to, I'm repeating myself, but overall the message is making better decisions. But for financial institutions, for example, it improves the credit risk of the portfolio. For financial institutions, it also allows to increase the retention rate of customers that not only have a loan, but also have an insurance product. Not only that they have a bank account, but also they have, some kind of cover for themselves and their families. And so when you look at our portfolio today, yes, over 50% of our customers are currently being served through financial institutions. So if you're a financial institution, please come speak to me or to Marjolaine that's in the audience, because we definitely see a lot of affinity on our products with yours. But we also work a lot with employers. And back into what's in it for them, having a workforce that is more resilient overall also decreases absenteeism, also allows for retention of employment. And therefore, we work a lot with these larger organizations that are employing low-wage employees in different sectors, be it on the retail sector, be it on the agricultural sector. We also work with workers' unions as part of our efforts to reach this population. And then finally, we're going back to the source. And this year we launched a very important partnership with the Universal Postal Union, for example, where our intention is to go back and leverage the fact that postal networks are one of the largest, and with highest capillarity and presence in a lot of emerging markets, and even in mature markets. When you look at La Banque Postale and CMP Assurance in France, or Correos in Spain, but then also in these emerging markets. And what we have done is we have documented very good success factors for insurance distribution through these postal networks. And what we are betting on in the future is to try to make sure that we can collaborate with these players over the longer run, precisely to make insurance more accessible for for communities that are in remote areas.
Yeah. And, I like the fact that you're looking at targeted aggregation as a strategy, because that really is the way forward to get a scale game with partners in this case. You talked about the source, and I think that's quite important. And I want to go back to the source of one of the earliest microinsurance policies, because Richard, you've been doing this for a while, and you've seen different partnerships and different distribution strategies work. So, aside from the fun trips you have to the Bahamas, how have you seen this evolve over time?
Sure. Yeah, I've had the pleasure of working in 74 countries over the years on microinsurance, and I think look, to Laura's point, I think it's really important. The provision of a safety net in society is a basic requirement, right? That society, either from private or public sector, needs to provide a safety net. That's an essential part of an economy. But we know that essentially, none of you woke up this morning wanting to buy insurance, right? None of us did. And none of our clients did either, right? So, if you make a loan available or a savings account, people will come forward and voluntarily want to take those products. But no one wakes up wanting to buy insurance. So insurance is a really hard financial product to distribute and sell. So distribution is the critical element. Yes, it's important to have a good product. Yes, it's important to have good technology. But if you don't get the distribution piece right, it will fail. Interestingly, when you look at microinsurance, if you have a product that typically costs $1 a month or less, you cannot afford to have a dedicated sales force which is only running around selling that product. So you have to leverage a sales force which is already being paid for in part or in full by some other activity. And this is why we talk about embedding, because we need to borrow the sales force of the microfinance organization or the mobile phone company or the ride-hailing company. We also need to borrow their brand, because quite frankly, people don't trust insurance companies. Don't say it too loudly. But the people's experience of insurance hasn't been great over the years, right? It's been, claims are slowly paid. There's a lot of barriers, and it's great that we've got two pioneers. AXA and Pioneer are definitely at the forefront of changing that narrative. But many insurance companies still operate in that way, where they make it really, really difficult. And so it's important that we borrow the brand that people trust. People trust the microfinance brand. They trust their mobile phone company because they regularly use those brands, and those brands deliver. And so when those brands say, when Roshana says, if you get sick, we will be there for you as Cash Foundation, people believe it because they have experience of Cash Foundation, right? And so it's important that insurers ride upon that trust that these organizations have in the community. So that's why we see this kind of B2B model, which is so dominant in the distribution space. The other point I just want to make is a little bit maybe controversial if I can, which is that, I think over the years, what I've experienced is that if you leave one of these aggregators, so an aggregator is a microfinance organization or a telco or ride-hailing, and if you leave those organizations in a dark room with an insurance company, right, for 3 months, and then you unlock the door after 3 months, it's very likely nothing's happened. They probably haven't worked out how to do things. And that's why, Pioneer was one of the leaders in this. They spun out a dedicated business unit. And then AXA Essential, it's great. There's a dedicated business unit. And one of the things that we've seen around the world is that you need someone who is going to drive these partnerships forward. If you just put an insurer and an aggregator together, distribution doesn't magically happen. And so there has to be someone who really understands how to design, distribute, and then administer these insurance products, because they are very, very different to what the traditional insurance companies are selling.
Fantastic. I was hoping you'd be controversial, to be honest. Craig, how do you then have people in a dark room and get them to do something and open the door 3 months later and realize that, some magic has happened?
Well, I guess they need to see that there's some benefit out of it for them on both sides. So, the key piece of having a partnership for distribution of insurance is for it to be a win-win-win scenario. Win for the clients, hopefully. I mean, that should be the first win, but it's often the third win. And then certainly for the distribution channel and for the insurer. I think the key piece in the distribution conversation for inclusive insurance is who's got the power. And at some point in the process, the distribution channel wakes up in the morning and says, I have the power. Because I have the clients, and the insurer can't get to the clients without me, and the insurer needs me to do all these things for them. And so this is when the middleman, the microfinance institution, the cell phone company, whoever that aggregator is, starts to say, well, I can negotiate a better deal from the insurer. And this is where it becomes a quick slippery slope toward not being a very sustainable solution. Because then that distribution channel gets sort of chip on their shoulder and says, hey, I can sort of not get a better deal, and I'll shop this around and talk to other insurers. So I think ideally what we're looking for are solutions that are win-win-win over the long term. because you don't want to be swapping insurers in and out all the time. You want to be able to have a relationship with that organization that lasts for a long time. And I think the ones that we see that are really cool in this regard are where they end up creating joint ventures or some sort of profit-sharing arrangement to align the incentives between the insurer, the distribution channel, and hopefully the distribution channel is arguing on behalf of its customers to create that win-win-win scenario. So I say that would be what might happen in this dark room. On the education question, I'm all in favor of making sure that clients understand insurance and that they appreciate how to claim and so forth. But I think we need to focus more energy on that frontline worker of the aggregator. Because they're the ones that interface with the clients and are the main sort of entry point. And if they don't believe in insurance, if they don't see the value of insurance, they're not going to pass on that message no matter how well you've designed your education tools. And so I think really investing in, for microfinance institutions, for the loan officers, and making sure that the tellers, everybody appreciates the value of insurance. One way to do it is to make sure that they have insurance as well, that they are covered and that they see the benefits, they appreciate the benefits, they can speak to this from their own experiences, and that hopefully will enable them to be more convincing and powerful in selling insurance to their customers.
I mean, you're absolutely right. You can't cook something and not eat it. And so where I feel like telcos go wrong is they talk about selling insurance as part of mobile money services or whatever. Are they insuring their own agents, who actually are the assets, who have the float and so on? Not yet, unfortunately. So you've got a very powerful point there. But on the relationship side of things, there's a psychological element of that. And the final question I want to touch on is the psychology, trust, and the nature of the outreach required to get insurance to where it needs to be. And so the question here is, what sort of initiatives have we seen, community-led initiatives that is, that have helped to overcome the skepticism and the lack of trust that all of you have talked about to help build user confidence? And what sort of lessons can we take away from a psychological element to improve uptake? And Solène, you've been extremely patient, so I'm going to go with you, because I also know you're going to give a great answer here.
Thank you. Trust is surely a crucial element for the 2 million clients that we have at Vision Fund. 71 to 92%, it depends on the countries, are a first-time user of insurance. So it's very new to insurance. So the trust is very key. So that's the reason why we always put a lot of effort. Craig, you mentioned about the staff being on field and educating the communities on insurance. So this is really key. And trying to empower the community workers, the World Vision volunteers that we have, of course, our MFI loan officer, is really an element that is crucial. And they hear insurance, they hear something from someone that they already trust. And it's just the continuity of the service that we provide to them in their life. But I think another element that is really key on insurance to build the trust is to deliver the promise that we do. We earlier talked about claim ratio, 50, 60%, good claim ratio, fine. Good means it's high enough to bring value to the clients. Yes, of course. But if we take a traditional or standard hospitalization insurance, what is the claim frequency? How many people will really benefit from that? Of course, it's not 50, 60%. When we talk about claim ratio, it's in terms of amount, but not in terms of frequency. So hospitalization is like 3 to 4%. So finally, you bring a product that will only benefit 3 to 4% of your portfolio. So and in that case, you don't really deliver on the promise that this is a helpful product that will help everyone in the community, or at least those who really need. So that's why at Vision Fund, we always try to negotiate with the insurance providers with whom we partner. We today have 55 insurance partners globally, and we always try to negotiate to add some value services, added services, like we started, of course, with telemedicine. It's an obvious one, but clients, we could see that clients, what they will think about the medical consultation that they could have over the phone, and even they receive a prescription on their phone, and they can go to the medical store. They can even get a discount to the medical store with the prescription that they got. Then they will calculate the time that they have saved, the cost that they have saved, not to go to the hospital, and then they will value this telemedicine. In Ecuador, we have a great service that we provide in addition. It's what we call the Orange Ambulance. So it's 2 mobile clinics going 250 days a year among the communities, so in very mountainous areas where people, they cannot access any health facility. And this mobile clinic will deliver with a general practitioner, with a nurse, will deliver some primary care, will health check people in the community. So this is also something that people really value. We have also in some other countries the medical brigade with 8-10 doctors with different specialty coming in the same place, in a community place, to really bring health to the community. So this is how we really deliver the value to people, and this is how we build the trust of the people. So we really believe at Vision Fund that insurance is not only a matter of claim and hospitalization, it's also what goes around with the insurance, along with the insurance product that we deliver.
And you're delivering more than insurance if you've got GP checks and telemedicine and
yeah, it's part
an
of
actual
the
physical
insurance
presence
product,
there.
yeah.
Yeah, and I can see how that would actually impact the psychology, that you'd see, okay, you are delivering and you're here for me in my time of need. And I want to now turn to Roshane as well, because given the focus that you have regarding the target base that you serve in Pakistan, that taking into account psychology is quite important, especially when it comes to building trust. What have you seen as being an important part of the way in which it has worked for Kash Foundation?
Thank you, Rishi, and I'm honored to be part of the elders along with Craig, who is, of course, the fount of wisdom and knowledge for the industry. So thank you for including me there. So as I see it, the psychology around this is based on 3 Ps. The first is purpose. Why are you doing what you're doing? And I think a lot of our speakers earlier touched upon that. It's about creating resilience for the client. That's the primary purpose of why you're doing that. So, and the other side is creating trust and embedding an additional service that's affordable and which will help the client manage contingencies. So I think that is you have to be very clear when you're designing a product, and that's how you will be able to then communicate the product better to the client. The second is the partnership. I think that also becomes very critical. Which insurance partner are you working with? And I'm standing on the distributor side. That becomes essential because your DNA has to match. Otherwise, that trust factor will be lost. And again, the psychology around designing this product will die a natural death. So for us, the selection of the insurance company that we work with is very important. The current one we work with on the hospitalization product is Jubilee Life. And again, we worked together for over a decade and a half, designing and redesigning. And that's also very important because you won't have the impact if your product remains static over the years. And the other new product that we're doing is with our friends who are sitting in the audience, EFU, Ali and Nilofer are in the audience, and we are designing a pension, because I think micro pension is another product that we haven't really talked about in the industry, and we need to, even as partners in the industry, develop more products going forward. So coming back to the third area, which is the proposition. What are you bringing on the table for the client? And that's where your communication starts. And I split it in 2 ways, and a lot of it has already been covered. First is, of course, the management side of the distribution, which is where your frontline officer comes in. What incentives do you have? How do you measure the indicators that are coupled with the delivery of insurance, whether it's turnaround time, whether it's the claim ratio, what have you? All of that has to be done transparently. And what incentives are you building for your frontline staff so that they can, service this and what's in it for them? So I think, and then the education. So there's a whole piece of managing this within your own system. The other side is, of course, the psychology of how you explain or how you communicate the product to the clients. Because, for us, the demographic we deal with, almost 50% of the women have either not been to school or barely finished primary school. So how do you communicate this to them? And we use storytelling, we use trainings, we use financial education, we use digital messaging. So we do all kinds of things to get them to understand. And then, of course, the most important connection is at the time of onboarding, when the business development officer is in the field, engaging with the client. That is when you have a captive audience. So you have to make sure that your insurance product is explained as well as your lending product. Because as we see it, as I was mentioning to you, the purpose of providing this particular product must start from the very top of the organization and should cascade down to every business development officer and every client. Otherwise, you're not going to succeed. So you have, this is the way, in addition to all the tools we use. We also use, for example, theater in the community. So we have, we do little skits around the issue of insurance, and those have been very popular. You show a before-after scenario where one household didn't have insurance and the other did. So once they see the tangible narrative unfolding in front of them, the uptake or acceptance of that service becomes more, it becomes more acceptable. So these are the kind of things that we've been, using. But the bottom line is you have to cut both ways. You have to have a management strategy and you have to have an education strategy. Both of them have to go together.
Thank you very much. And I think there's a really good example I want to move on to as the very last point in terms of engaging with your captive audience. And again, what we've seen in the Philippines, Lorenzo, is really special. And I've seen it with my very own eyes in terms of how powerful that can actually be. Just wondering if you can share that with us as you actually get the last word.
Right. I think Richard said it best. Nobody wakes up wanting to buy insurance. And then I also always say, people look at insurance people and they say, you're not sexy, you're boring, and you're so unattractive, and you really turn me off.
But you are sexy. You're sexy.
Right. Okay. Now Richard feels... Okay. But the whole issue is, a lot of that is true. And so the perception is part of the equation already, isn't it? So what we need to do is to address those head on. Now, the panelists really talk about partnerships because we want to piggyback off that acceptability, that trust that the partners have. And that's fine. But we need to equip them. We need to equip them, the frontliners, with something. And what would that be? So there are ways of doing it. Okay, the term is that we're too legalistic. We use technical terms nobody understands. So simplify it. I think what we've tried to do is we've asked permission from our government that we were allowed to, because English is the language of insurance in the Philippines. We have Taglish, a blend of Tagalog and English. We've imputed visuals on it so that people see, they see flames, okay, that's fire, they see someone on crutches, that's an accident. So that helps them realize what it's all about. And when they buy a policy, they take home a proof of cover that includes the requirements for claims and who to call, because you want them to know we're here for you. No, but the moment of truth is claims. And so long as it's not highly fraudulent or viciously, breaking some law, you should, as an insurer, look for ways to pay claims than reasons why you cannot. Okay, quick example before we close. Widow comes to our office in Cebu, cries and says, my husband, died, I need money, I want the proceeds. We said, yep, sure, we'll make it quick. Death certificate, isn't it? Yeah. I can't give you a death certificate, but he died, yeah. Where's the body? It's in the hospital. They won't release it because I don't have money to pay the bill. So this woman's in the catch-22, isn't it? So normally, what would insurers do? What would normal insurers do? Yeah. Well, figure something out, and when you have the death certificate, come and we'll pay you. We just said, wait here. We just said, let's send someone to the hospital. Double check. They came back in 30 minutes. Back then, traffic wasn't so bad. We double checked, is he on a record? Okay, we'll give you an advance. And you come back with a death certificate afterwards. Ways of settling it. Look, proving to them, we're not here to skirt our responsibility. We're here with you. And if you don't take actions like that to prove that you are with them in their moment of truth, you will never gain their trust.
That's sexy, Lorenzo.
Thank you.
Okay, thank you very much. And there you have it. The moment of truth is when the claims are paid. Now, I've been told we've got 5 minutes for Q&A. So if anyone's got a burning question or a remark to make, are there roving mics, Sam? Yeah, perfect. Please put your hand up. The lady there.
Thank you so much. I'm Erin from Finthopology. I'd like to respond to the point about nobody waking up wanting to buy insurance. The same is said about pensions, taxes, and payments, but I can actually think of exceptions to all of those. I'll stick with one, which is that I live in the Netherlands, and I have a strong suspicion that the Dutch do wake up in the morning with a burning desire to buy insurance because they're quite crazy about it and quite over-insured, to the extent where they actually have a board game about insurance, which they find quite fun. So while I do believe your overall point is generally valid, there are always cultural exceptions and things can change. So my kind of advice would be check with your customers about whether this is really the case or perhaps we're just assuming too early that they're really just not interested at all.
Would you recommend the board game?
The Dutch are weird, aren't they? Yeah, sorry if there's any Dutch people in here. But.
Well, maybe there is a silver lining in the sense that maybe they won't, it's not that they don't wake up wanting to buy insurance as a product, but they do think about the risks that they are exposed constantly. And I think perhaps that's the conducting thread, of what resilience is about, is once again helping households, small businesses, and governments better manage these risks so that they are overall better decisions and better facing towards the future.
It's a really good point. When we try to sell life insurance, people would run away. When we said to them, do you want your kids to finish school if something happens to you? Then there was a queue of people who wanted to find out more. So it is really important to position it. But look, I mean, I reckon if we took a poll in here around who actually has voluntary insurance, I know I wouldn't put my hand up. So I don't actually buy any voluntary insurance beyond what the government says I have to buy. And I'd be willing to bet quite a lot of money that the majority in this room don't buy insurance beyond what their government says they have to buy.
So you don't actually eat what you cook then?
No.
Right, okay.
I don't, because I think insurance is kind of broken at the moment. Yeah, but that's just me.
Lorenzo.
But it is possible. It is possible to win converts if you pay claims, if you prove your case. And we had such an instance during the start of the first lockdown of the pandemic. Out of the millions of clients we counted in that period about 8 weeks, 70,000 people actually reached out to us through Messenger, through Facebook, to ask about their cover. Now, 70,000 out of a few millions.
If I may, sorry, Rishi, if I may interject, in fact, for us, the health insurance has become a headline. People come to us to actually get the insurance. So once you see the claims, going out, it becomes a demand creator.
Fantastic. Well, I've been told one more question, and then otherwise I will be depriving you of a caffeine break.
Dutchman.
Dutchman. Thank you very much, Michael Rabo Foundation. Thank you for keeping us very active here on this very boring, grey, non-sexy subject. The question is, what's the future? What's the future of, I didn't hear that, what's the future of inclusive insurance, and how do you calculate it, the balance between the risk and payout, if your shocks are not anymore irregular or erratic or long time, but every year you have a horrible typhoon in passing by Philippines. Every year you have more and more droughts, terrible droughts in agriculture or terrible rains. Health, people are getting older, but the last 2 years they're getting more sick and use much more health insurance. So how do you calculate it, and how do you keep the subject alive? What kind of changes, what kind of future outlook you think you have?
Well, I think in the short run, climate change is a huge opportunity for the insurance industry. Because people are much more aware of their risks and their vulnerabilities, and insurers need to be able to very actively respond to that. But the long term, are these risks poolable? Can you pool these risks in a way that is going to make sense if they keep happening over and over again at such scale? And that's a huge concern, I think, within the insurance industry in general.
Right, I think
I think it's a quick, I agree with Craig completely. It's a quick review that we must make. However, even for us, we track, all these bits of climate changes, and yet we've had a couple of squeezed by with the amount of typhoons we get. We squeezed by a couple of good years, and then this year has been extremely bad. So even on my way here, I was telling Craig, we've paid over $2 million in microclaims from typhoons alone. But you want that moment of truth, isn't it? Because you want to establish the credibility and the noble background behind the business of insurance, that they're there with you. Yeah. And so that, now we have to work the rest of it out, isn't it? Because it has to make a business sense. But you want to be there. This is the best time to earn their trust.
Yeah. And I would add two things that we're looking into on this intersection between climate and social cohesion, is that, first of all, you can work on preparedness. And insurance companies can actually adapt their products on the preparedness part. So before the typhoon hits, can you deploy your insurance benefits so that people can buy sandbags to protect, their homes to decrease the level of damage? This is a win-win solution for the insurer in terms of losses, but more importantly for those communities, because it means that they can get back on track much faster. So there's a lot of anticipatory insurance products that we're looking into, that the sector is looking into. And the second part is risk management is broader than insurance as a product, and Craig touched upon this earlier. So it means that there needs to be collaboration with other actors and to think about risk in different layers. Some elements will be able to be addressed through inclusive insurance at a micro level, but there are also going to be other interventions at a meso level with international buyers, with employers, with other institutions. And then at a third level, where there's this organization of public funding that can also be critical to promote this resilience overall.
Thank you very much, Laura. I was very keen to let you speak, otherwise I know my membership of the Microinsurance Network could be revoked. I just want to let you know one housekeeping thing. Unfortunately, we've run out of time, but the spotlight that Sam mentioned is now available, so please pick up a hard copy. It should be good. I just want to say a big thank you to all of you, but before I do, I feel like this panel has been unlike an insurance policy. It's under-promised and it's over-delivered, and so I hope that for all of you, while you were here, none of your premiums went up, but maybe your knowledge levels did, which would be ideal. Please enjoy the rest of today. There are some fantastic breakout sessions where you learn more about the intricacies. But for now, ladies and gentlemen, Lorenzo Chan, Craig Churchill, Richard Leftley, Laura Rosado, and Solène Favre, you've been fantastic, and so have you, Matt. And Roshane Zafar, and Matt Genocidi. Thank you very much.
Merci, Richie.
Merci. Wait, let's get a selfie together.
Oh, picture?
Guys, don't vanish. We're getting photos.